Hey, Inspired Moneymaker. Today's guest says we're still in the early days for blockchain networks and why investors may want to use ETFs to invest in them. Episode 222 features Greg King, founder and CEO of Osprey Funds and RecShares.
We all know there's only 21 million Bitcoin ever possible. That train is just heading down a track, and it's going to keep going. So I'm bullish Bitcoin long term. It sounds crazy to say this, but I think Bitcoin is probably the more conservative, boring part of the crypto investing landscape.
I'm Andy Wong, host of the Inspired Money podcast and financial advisor at Runnymede Capital Management. Today's guest is Greg King. During his career, he has built and launched over 100 exchange-traded investment products listed on the New York Stock Exchange, Nasdaq, and CBOE. He combined his experience and interest in Bitcoin to launch digital asset investment firm Osprey Funds in 2018. Osprey offers the Bitcoin Trust. It trades under ticker symbol OBTC and is currently the lowest cost publicly traded Bitcoin fund in the United States. Osprey also manages other altcoin funds that include Solana, Algorand, Polkadot, and Polygon. In 2022, Osprey plans to launch its first actively managed strategy, the Osprey NFT Fund. In this episode, you'll learn benefits of exchange-traded funds over mutual funds, the basics of different coins and projects, and why you might consider owning Bitcoin or other cryptocurrencies in an ETF. Now let's get inspired with Greg King. Greg, welcome to Inspired Money. I'm so excited to have you on the show.
Hey, it's great to be here, Andy.
Let's jump right in. What's your earliest childhood memory of money?
My earliest childhood memory of money is that we didn't have any. I grew up with a hyper awareness of that fact. I was raised by a single mom, and as the oldest of three boys, I remember very early on just being acutely aware that A, we didn't have much money, and B, the answer to almost every problem was money. If we had more of it, these things wouldn't be problems. And so I think I know that influenced my life quite a bit in terms of the path I chose and just a lot of my thinking in my younger years. I remember, for example, a house we lived in from, I want to say, when I was in second grade to fifth grade. I knew the landlord's name. I knew our monthly rent payment. I knew, I knew a lot of things about our finances. I think my mom brought me into those discussions probably way too early. But I was more than happy to help, talk about these things because I was always kind of like a math kid. So I liked numbers and they stuck in my head, and I just liked the whole business of money. But we didn't have much, and so whatever I could do to earn a little bit of money, I tried to do. And I remember there was a local church. I somehow got a gig mowing their lawn. It was this huge. I mean, to me, as I remember it, it was like the size of a football field. It probably wasn't quite that big. But I used to mow it, and I got $5 when all was done. It took and I don't think it was $5 an hour because it took me a lot longer than that. But I got $5 once a week. I was pretty happy about that.
And how did that involvement or awareness about money translate into getting into the idea of investing? Because I understand that you started getting interested pretty early.
I did, yeah. I remember in high school reading books about Warren Buffett and Peter Lynch, who was a big, mutual fund manager back in the day. And I was I don't remember exactly where I came across the idea of investing, like in the stock market, et cetera. My mom certainly didn't have a stock portfolio, and it wasn't the talk around the dinner table, that's for sure. But somehow or another, I found my way into that world, or at least reading about that world. And I was fascinated by stocks and just the idea of the markets and investing from a pretty early age. I want to say 12, 13, 14, I started really kind of reading everything I could get my hands on. I even read The Art of the Deal by Donald Trump. I think it was the late 80s book.
What was one
So
of your
lots
favorite
of
books
books.
that you look back on and still kind of hold that up as something that was foundational for you?
I really enjoyed reading a book called One Up on Wall Street by
Peter
Peter
Lynch.
Lynch. And and it was just this idea that regular people could make good decisions in their stock portfolios by um, doing a bit of legwork, doing a bit of homework. And he talked a lot about retail stocks and different restaurant chains and things like that. And I was pretty conscious of this idea that I was not in the flow, right? I was not in the right, born into the right circumstances per se, where, say my dad was running a firm or something like that, and I could kind of ease my way into it. I had to figure this out from the outside. And so I remember that book being inspirational in the sense that it gave me hope that, regular people could do it. And I always, of course, thought I was, pretty clever and pretty motivated. So I figured, oh, okay, I'm going to figure this out. And that was there was a lot of other books that were inspirational. I really was a big Warren Buffett fan. I feel like he's migrated from the early days in terms of how he invests and how he views the world these days. But back then, when you're talking about 60s and 70s, Warren Buffett, I was a very big fan.
Greg, were you ever able to save those $5 from each lawn mow and invest it and find like that 5 or 10 bagger?
Um, Those specific $5, I don't know exactly where they went. I do know that I had saved some money and bought my first car in high school, which I paid $1,100 for, and it broke down within like 2 weeks of when I bought it. So that was a big snafu. But yeah, I don't know what happened to that money because I was pretty young at the time, but I was pretty good at saving too. So it probably paid for part of my future car.
So give us a quick overview of your career. And what I'm trying to get at is because you have an extensive experience in ETNs, ETFs, I guess ETPs, and most
Hmm.
people, I think there are many people who don't know the difference between a mutual fund and an exchange traded fund. So you're uniquely qualified to decipher ETP, ETF, ETN for everybody.
Sure. Yeah. Well, there's a lot in there to unpack, but maybe just briefly the differences between those products. So the Investment Company Act of 1940, right, came along after the 20s and 30s, where a lot of people lost a lot of money, and there had been a lot of scams out there and leverage and things, and so that governs how publicly available funds are offered in the U.S. Right, and out of that body of law, we get mutual funds and a few other variations on that theme, like closed-end funds, et cetera. And I think it was in the 90s where the first ETFs were formed, and really the idea was kind of like everything these days, right? Things are getting more and more convenient and more rapid fire. So somebody somewhere said, "Hey, we don't want to be able to just buy and sell shares in our mutual fund once a day at 4 o'clock. What happens if I want to sell at 11 a.m.?" And so ETFs were uh, kind of came on the scene as essentially mutual funds that were given an exemption from certain rules in the 40 Act that allowed them to trade like a stock. And so you could list these shares on a stock exchange. And that gave people the ability to buy and sell these funds on an intraday basis. And of course, it's, sort of, I'm dating myself, but I remember when email came along and everyone was fascinated by this idea of snail mail versus email, right? Now of course I get teased by my kids. I tell them, hey, yeah, just forward me that or send me an email, and they go, send you an email, Dad? Really? You want me to email you? because they're all about texting, and not even texting, like messaging in Instagram or something. So anyway, the world moves forward, but the financial world sadly takes a bit more time. And it's not all sad, right? A lot of that is about investor protection and being thorough. I think the regulators certainly want to be thorough, but innovation doesn't happen quite as quickly in the financial sphere. So in the 90s, we got the first ETFs, and that trend really has continued to this day. And ETFs have ballooned versus the more traditional mutual fund strategy, and that's partially because of the convenience of trading intraday, but it's also, there's a tax angle there. The way that ETFs actually work is they're much more efficient typically than mutual funds. There's won't get into the vagaries of it, but yeah, a well-run ETF rarely distributes capital gains because it's able to pass those through to the market makers involved. My career was, I had, given what I said about my early upbringing, I was very focused on the pragmatic in college. So I wasn't not knocking it, but I wasn't one of these kind of art history majors, right? I was super focused on managing money, frankly. I got a degree in business administration, figured out after a couple of years of graduating that wasn't quite enough to get me where I wanted to go. So I went back for an MBA. And then post MBA, my first job was with an investment bank, was Barclays in London. And that wasn't quite what I had envisioned for myself, but obviously, you have to, choose from the available options. I thought I would be a money manager just straight away, but this was an interesting gig in the sense that it was in London, which was cool. And I was married to an English major, so she was excited about spending time in the UK. And it was what was called a solutions team. And so using derivatives, the team's mandate was to build custom investment solutions for all manner of clients, everything from high net worth through to institutions. And so in hindsight, I was really fortunate to land in that part of the bank where I just learned a ton. I learned so much in the first year or two, just getting exposed to all kinds of clients, all kinds of transactions. And really the world of derivatives is, sort of an order of magnitude more complex than just the plain vanilla instruments like stocks and bonds. And you really have to start to understand the interplay of the different asset classes and how all the Greeks work and things like that. So for my mind and interest, it was great. I was having a lot of fun. And working at Barclays is what led to kind of the ETF world.
So to the average investor, do they need to know the difference between an ETF and ETN or even mutual fund? Like, is there a benefit to it? You mentioned that ETFs are more tax efficient to mutual funds. Do mutual funds have any advantages today?
They do. I would say that the main advantage, although this is changing, but if you take a step back, ETFs were initially almost entirely a beta product. And so when I say beta, what I'm referring to there is this idea of passive products, passively managed index-based products, as opposed to alpha products, right? So your typical mutual fund's an alpha product. You have a star portfolio manager like Peter Lynch, and they're trying to beat the market. Your typical ETF is an index-based product. And so those two worlds don't necessarily overlap. That being said, actively managed ETFs are very much on the rise. And, there's some pretty notable examples of that. Cathie Wood's firm, ARK, is probably the most prominent in terms of attention from kind of the news anyways. But actively managed ETFs are now a thing. And so I would say that the remaining advantages that mutual funds had over ETFs are very much waning. That being said, there are certainly a huge contingent of mutual fund managers that still feel pretty strongly that they don't want to have to reveal their holdings on a daily basis, which is a requirement for ETFs, right? So they don't need to do that as a mutual fund. I believe that you've got a 90-day lag, or I suppose it's actually 45 days from when the quarter end reports are filed, and then everyone sees what's in your portfolio. So they're able to kind of accumulate positions and things. But of course, if you're a subpar manager, that doesn't matter. It only matters for the guys who can beat the market, right? And we know from the research that's kind of 20%, maybe 30%. The vast majority of active managers fail to beat their benchmark net of fees. So so that trend moving towards indexing, the trend of convenience, and the tax benefits, all three of those have been tailwinds for the exchange traded product world for pretty much 3 decades. That being said, there's still more money in mutual funds than in ETFs.
There are a lot of both mutual funds and ETFs. I can't even keep track how many ETFs there are anymore. Tell us a little bit about how you got into Bitcoin and blockchain.
Oh, sure. So just, given my interest in kind of all things finance, after the crisis in 2008, I was a pretty big, I want to say pretty big buyer. It's not like I was buying billions or anything, but for my portfolio, I was investing like a disproportionately a large percentage into gold, silver, those types of investments, just because I saw the money printing happening, et cetera, et cetera. And I was at a conference and sort of tuning out the speaker, kind of browsing the news, and happened to read some article about Bitcoin. And this was in 2013. So I remember that evening back in my hotel room, I must have spent sort of 3 hours kind of researching Bitcoin. It's the first time I ever heard of it, trying to figure out what it was and understand it. But I was pretty fascinated by the concept. And so at that point in time, there were very few ways. If you weren't like a real techie person, there were very few ways to access Bitcoin, but Coinbase existed. And so I opened a Coinbase account and bought my first Bitcoin. And, once you take a position, then you watch the market, right? So since then, I've been an observer and a participant in the crypto space. And I mean, it's gone places I never could have imagined. And for that reason, I know that it will continue to go additional places that I can't even imagine. So it's a pretty fascinating market.
Compare and contrast your Bitcoin experience or position versus the gold and silver in that period. It's got to be drastic.
Performance wise, yeah. I mean, no comparison whatsoever. But I was still pretty loyal to gold and precious metals. So I wasn't one of these people that thought, oh, we don't need that anymore. Bitcoin's here, and so now gold can just go away. I maintained both, and probably a larger position in gold than I had Bitcoin for a while. The trouble with gold is that derivatives, to take a step back, derivatives are like knives, right? We need knives for, chefs need knives for cooking, and surgeons need knives for operating. But criminals can use knives for bad things. And so it's similar with derivatives. And in my view, the gold and silver markets are not entirely transparent in terms of what the real price is, because there are so many ways that very large entities can control them. And gold is sort of the global reserve currency, and governments overtly manage, let's call it, their currencies, right? They talk about Fed policy, and then these are actions designed to affect the price of their currencies vis-a-vis other countries and other economies. And so why would we not think that that takes place in the gold market as well? And so gold can be a ballast in a portfolio and somewhat of a hedge, but you're never going to see it as a growth asset. There's no story behind gold like there is Bitcoin and some of the other cryptos that really gives rise to large secular moves to the upside.
So what is your view today on Bitcoin specifically, but other cryptos? What place does that have in somebody's portfolio?
So crypto is an interesting concept. It's an interesting word. It's an interesting prefix, really, because it's so broad and it's come to mean so many things. Bitcoin, let's say, is one application of blockchain technology, and it's addressed at solving, one or maybe a couple problems. But there are so many other projects in crypto that are pointed completely in a different direction. And so when I talk about crypto at this point, I think about the use cases. I think about the problems that are attempting to be solved by these projects. And in my view, there's kind of, well, I don't want to put a number out there because there's so many different use cases, but there are different buckets. So if you talk about Bitcoin, to me, that lives in the potential substitutes for hard money bucket, right? There's a few other contenders in there, but seems to me that Bitcoin is the runaway winner, is here to stay. The on-ramps being built for institutional investment, for corporate investment, they're significant. And we all know there's only 21 million Bitcoin ever possible. That train is just heading down a track, and it's going to keep going. So I'm bullish Bitcoin long term. It sounds crazy to say this, but I think Bitcoin is probably the more conservative, boring part of the crypto investing landscape. But if I were to advise my cousin or one of the people that call me from time to time about what they should do, certainly a portfolio of crypto, in my view, should have some Bitcoin in it, and it should be, probably the largest position. In the stock world, we always talk about market cap weighting. So if you do that now, your portfolio is going to be, roughly half Bitcoin, because Bitcoin is roughly half of the total market cap of all crypto. But then you move on into other buckets, starting next with Ethereum. And Ethereum is a totally different beast. It is a smart contracts platform upon which hundreds and thousands of applications have been built. And what is that, at the end of the day? And, at one point it sort of hit me, and I probably, it crystallized for me in my head. I'd probably sort of read this a million times in different ways, but the rest of crypto, at least at the layer one level, is really tech investing. That's what it is. You're investing in technology. So these aren't tech stocks. They're set up differently. They're decentralized. They're the tokenomics, as they're referred to, the kind of economics of those projects are different from owning the equity of a company or corporation per se, but there's a similar idea. At the end of the day, you're essentially making a bet on a certain project, certain protocol, a certain software program that this is going to continue to be valuable to society over time and be used. So that's how I think about Ethereum. And when I say layer one, in the crypto world, what that means is projects that are essentially trying to build out infrastructure. They're trying to be the backbone of a certain branch of the tree of applications that can be facilitated by crypto, but they're not necessarily, a project themselves. So in other words, these are, analogous to maybe the internet versus a website. Right. So Ethereum is trying to be, let's say, in this analogy, the internet of a certain country or whatever, and not one of the particular websites or programs that can run on that. So we're at Osprey, like the firm I run, we're very focused on the layer one protocols because it's still really early days, and Ethereum is the the lead dog for sure in this space. But there are other protocols and projects that stand a good chance of, certainly capturing a piece of the pie, perhaps eventually even competing at the level that Ethereum has, or even overtaking it. So, remains to be seen what we're all talking about 3 years from now, 5 years from now. But whereas in the case of like a Bitcoin and these digital substitutes for hard money, there are these network effects that are really difficult to overcome if you're the second mover. In the layer one kind of infrastructure tech space, that's not so much the case. There's less stickiness there, and you can observe applications and teams that are building applications migrate from building on one chain to building on another. And so in that space, we think you need to have a bit more diversification. And then it just goes from there, because then we can talk about the applications like NFTs and DeFi and all these things that get built on these layer ones.
It can be overwhelming, I think, for people trying to understand the differences. And when it comes to Ethereum versus Solana? Is it one or the other, or is it something together?
I don't think it's one or the other. I think that they are, they certainly compete with each other to a certain extent, but Solana in particular emphasizes speed, and that is important to a certain set of applications and less important to others. So you have this a trilemma, they call it, right? That says this theory that says that with protocols, you're trying for speed, scalability, and security, right? And so in terms of speed, you can kind of lean into that, but you may wind up sacrificing on the security and scalability. And an integral part of that is this concept of decentralization, because the sort of purist in the blockchain space really feel strongly about all blockchains being decentralized, and a huge part of the purported benefits to society over time of some of these applications are, in fact, that we will be able to take back control of some of these, daily applications that we use, like a Facebook or a Google or an Amazon, and come up with Web3 versions that reward the participants rather than the central operators. We won't name names, but everyone knows who we're talking about. And so that decentralization concept is really in the DNA of most blockchain and crypto enthusiasts. However, if you want to increase, basically the speed and scalability of your chain, a lot of times that cuts in the opposite direction, and you want to centralize. So you want to control that from a central perspective. So you have, for example, Binance, which is basically the largest exchange in the world, and their project, which is forked from Ethereum, but it's heavily centralized. It's been very popular because some people don't mind that, but other people do. And so there's these trade-offs. And the beauty of markets is that people can vote with their feet, whether it's people buying the token and, sort of voicing their support that way, or in this world, developers coming onto the project, because that is as important, if not more, to the success of some of these, is how much brain power do you have kind of working on your protocol and continuing to upgrade and improve it, because these things are not static. That's one of the things with one of the criticisms of Bitcoin is that it hasn't evolved the way that it needed to become perhaps what the creator envisioned, which is a digital substitute for cash. Digital substitute for gold is different. That's a bit more steady. Like, how much do you move your gold coins around, right? Not very much. They represent value. That's great, but digital cash is different. We're not paying for our cappuccinos at Starbucks with Bitcoin yet, right? That didn't wind up happening. It still could theoretically, but what's more likely is probably there's another crypto that solves that problem.
Greg, let's take a step back. At what point as an entrepreneur did you start thinking that you could marry your experience in ETPs and derivatives and combine that with your interest in digital currencies?
The quick answer is in late 2015. And the circumstances around that are the following. So in 2013, that was the year I first bought Bitcoin, started watching it. And also the year, probably not coincidentally, that the Winklevoss twins filed for a Bitcoin ETF, right? Considering we got one sort of, a Bitcoin futures ETF finally this year, they were about 8 years too early. And we still don't have a physical Bitcoin ETF, but I had a position, they had a filing, and so watching the space, both from a personal and professional level, became part of what I did. But at the time, Bitcoin was completely unregulated and really undefined. So in 2015, what I'm specifically referring to is that the CFTC brought an action against some company for doing something in the crypto space. But in the course of doing that, they basically defined Bitcoin as a commodity. And that was helpful because before then, nobody knew, is it a currency, in which case it maps into these set of rules and the OCC. Is it a security, in which case it maps into the SEC? No, apparently it's a commodity. So now it goes into the CFTC. And there was some structure from a regulatory perspective starting to develop. And then at that point for me, it's like, wait, I started in this business of creating ETPs, which we didn't actually refer to. I could talk about that for a second, but I created the first ever ETN, exchange traded note, which is basically something that looks like an ETF, but at the end of the day was a bond issued by a bank. And the reason we did that in 2004 or 5 and then launched in 2006 was because iShares was looking to create commodity linked ETFs. And back to the beginning of the conversation, the 40 Act, it contemplates securities related portfolios. It really it wasn't designed to think through commodity related portfolios. And so there was some challenges in delivering out a broad based ETF that tracked commodities. So this is in the mid 2000s. So I created this structure and we launched it. It was very successful. But flash back forward again to 2015, 10 years later, and I'm thinking, wait a second, I started off creating commodities linked ETPs. Now all of a sudden Bitcoin's a commodity. I think I can figure this out. And so we started talking to futures exchanges. We started talking to a lot of people in 2016. And then in 2017, we were the second entity to file for a Bitcoin ETF. And that's really when we started in earnest. However, in 2018, or by 2018, I had come to the opinion that the SEC was not comfortable with ETFs in the crypto space and probably wouldn't be for a while. So we regrouped and decided to create Osprey Funds. And the idea was, back to my roots, I'm sort of passionate about giving investors access to interesting and compelling investments, right? I love the idea of people pulling themselves up by the bootstraps, being able to design a portfolio, invest, and really get somewhere in life. And so that's what matters to me. That's what I'm doing, why I'm doing what I'm doing. And so I was determined to offer something in the space, because by this time, I'd been personally a holder of Bitcoin for 5 years. I'd seen what it had done for me, and I know that there are a lot of people out there who may not have the kind of time or resources or ability to figure out how to invest in native crypto, or they may have assets tied up in the system in brokerage accounts and IRAs, and you can't access it there. So really, creating Osprey in 2018 was about facilitating that access, and that's how it all sort of came together.
What does the product offering look like at Osprey today? Because when I go to the website, I see there are offerings for accredited investors, and then it looks like the Bitcoin product looks like OBTC looks like that can be invested for anyone.
Yeah. So as you know, as is common for all financial services providers, we have to stick with what's legal in the U.S. And right now, the offerings that we have are only available to accredited investors, per the regulations. We'd love to offer them more broadly, but we're not allowed to. But the way it works is that our funds, and we have 5 funds so far. These are single asset trusts. We have a Bitcoin one that holds Polkadot, Solana, Algorand, and Polygon. These are 4 additional crypto tokens, and those are each in a single fund. And the idea is to get them listed or trading under a ticker symbol. That takes us around a year after the product launch. But once that happens, they actually are available to retail investors, depending on the brokerage. They trade on the OTC market, but these days we're seeing a lot of large foreign stocks that trade OTC, and it's becoming a lot more mainstream. So they trade at the highest tier, the OTCQX, and most discount brokers will allow access for investors, but it takes some time. So we listed OBTC earlier this year. That's our one product that does have a ticker symbol. It is the cheapest way to access Bitcoin in a publicly traded fund available in the U.S. And we're hoping to get tickers for the other products early next year. And so at that point, they would be available to investors. But we've taken the approach of, look, we can't launch a fund on every single token. We wouldn't want to. We've definitely passed on some ideas that may have been floated to us. But what we're trying to do is curate the space, put forward what we think are funds on tokens that stand a really good chance of being successful over time. Of course, we can't guarantee that, but we've picked layer 1 protocols that are trying to be the backbone of at least a portion of the ecosystem, and in that sense, in our view, have more staying power. However, those are all beta products, right? Those are simple access products, and investors have to make their own decision as to, well, do I want to buy, Polkadot or not? Now I have to go learn about Polkadot. The second thing we're doing is we want to offer managed solutions, right? A fund where we are the investment manager, we are making decisions, and you don't have to worry about it. So the first of those products that we're launching is our NFT fund. And that is one of the use cases for crypto that we're very excited about, and but also an area of the market where I think investors experience the most difficulty and the most confusion in terms of understanding how to invest, how to tackle that space, et cetera. So to us, it seemed obvious to be the next area of focus, in the sense that investors need a guide. They need someone who's on it full time, 24/7 with a few sleeping and bathroom breaks, but really focused on the space in a way that they could never do for themselves. And these aren't stocks; these are digital art, and so it's a very exciting, interesting, compelling space. But also, you really have to know how to separate kind of the good from the not so good.
Okay, I have a couple of questions
Sure.
jump to mind, because one is with the Bitcoin Trust and then the other coins. Does it pose any issues when the once you get a ticker symbol, those funds are now trading during market hours, but crypto is trading 24 hours a day. Does that cause any issues?
Well, yeah, in the sense that the price can gap overnight, right? Typically, in the stock market, you'll see that if there's news after the bell or things, it's reflected in the price of the stock the next morning, or in the after hours markets. And the same is really true for crypto, with the exception that it's even more true, right? You certainly have moves over the weekend, at night, because a lot of trading happens in Asia, and all these markets are connected. So, yeah, I mean, I don't know if you saw, but I saw an article recently that I think, 0.72 Ventures was backing a firm that is looking to create a 24/7 stock market, or exchange, right? And I think that's the way things are going, right? Things will move in that direction. I mean, sure, we'll probably always have an official open and official close, but this idea that you can trade if you need to at any time has certainly permeated the crypto world. I mean, there's a whole generation of people, kids, my kids who are actually kids, they're minors, laugh when I call 20 somethings kids, but anyway, I do. There's a lot of kids out there that they don't understand a world where markets close, right? They're like, well, why can't I trade? I don't care if it's Sunday. So that's definitely gonna move in that direction. The crypto markets are 24/7. So yeah, that can cause some issues for sure.
And then back to the NFTs, because it seems like the coin trusts are one thing because you're trying to track the value of the coin, but the NFT seems totally different.
Yeah.
That's an actively managed strategy, right? Where you have a portfolio manager who is doing the research, doing the purchase and sales.
Exactly. Yeah. Totally, other end of the spectrum. The most simple beta product is a one stock fund, right? And that's essentially what we built in crypto. This shows you how early it is, right? We're essentially building one stock funds, and in some cases, we're building them for institutional managers, because there are mutual fund managers that want access to crypto within their mutual fund, and they can't go out and open an account and buy it. So they have to buy other securities or other funds. They may come in and purchase our funds. And so our funds could be held within other funds. So that's on the beta side. But to my point, with Osprey, we're building an all-inclusive, entirely crypto-focused asset management firm. So we want to be able to offer all the products that you can get from different asset managers. And that includes not just beta products, but also alpha. And so, to my previous comment, we just felt the NFT space. So alpha is, the most valuable managers in alpha space, or in investing, are operating in esoteric, non-transparent markets that you could never understand on your own, right? Say, an actively managed fund that invests in, sub-Saharan African stocks, right? You're never going to figure that out on your own. You got some guy who's down there, on the ground figuring it out. Okay, that's what you pay for in terms of a manager, who's hopefully generating positive alpha. That's how we're viewing the NFT space, and so we've hired in a portfolio manager who's been deep into NFTs pretty much since the beginning. He's bought thousands and sold them himself. And our strategy is such that, because art is tricky, right? Art is a tricky market, but it's very clear that at this point, certain NFTs are here to stay. I mean, they're NFTs that have sold for over $50 million, right? And that's not just a fluke. People who put up that kind of money tend to know what they're doing, and it's not just a one-off. So there is a cadre of NFTs that is being established as the blue chips, and since it's so early, getting a piece of those is going to just, we believe, accrue rewards over time. And so our fund within the NFT space is going to be relatively conservative. We will take exposure to what we think are the blue chip projects with the vast majority of the fund assets. But we will also be a little bit speculative and try and get in on some of the earlier NFT drops rather than buying in, after they've been well established. Give you an example: CryptoPunks. Most people in NFTs have heard of CryptoPunks. If you haven't, don't feel bad. But these are one of the first NFT projects ever. 10,000 digital punks were created, and they trade based on people's estimation of the rareness or coolness of these different punks, and they're priced anywhere from at the low end at this point, a few $100,000 up into millions of dollars. And but that being said, that group of art seems to be pretty well established as blue chip digital art at this point, and that will likely just increase in value over time. On average, those punks. So there are other projects like that, but then there are new projects that are starting all the time. They're much more speculative, but also the rewards are potentially that much higher because a lot of times you can get NFTs for very low prices at the beginning, just on the hopes that they really catch on. So majority blue chip, a minority kind of speculative is our strategy.
With the NFT fund, I think that's launching next year.
That'll be in Q1.
First quarter.
Yeah, in Q1. So, and again, that's for accredited investors only. Sadly, thankfully, the accredited investor definition has been recently relaxed by the authorities, so more people can be included in that. But yeah,
give everybody the current definition. That includes property.
Yeah. So I'm not the best guy to ask, but I believe it's the relaxed rules are it can include employees of financial firms that have specific knowledge, whereas before you had to meet the income and asset test. But now you can. So back to the kids. You can have, and I've seen it before. Young guys and girls working, very knowledgeable, very smart, but they're just not at that level where they're making $200,000 or more a year or $1 million of assets. So I think it's great that it can include some of those folks because I'm all for more access, and these funds still come with prospectuses that delineate all the risks, et cetera, and so we're excited to offer this in Q1, so stay tuned there.
Does that stay as a private placement, accredited investors only, or does that eventually get listed also?
That one stays as far as we know. It's possible that rules could get significantly changed over time, but right now we're just envisioning that as a private fund.
Okay.
But more similar to a hedge fund or a venture fund, right? But with a $50,000 minimum, so much more accessible than a lot of those funds typically are.
Greg, I'd like to ask all the Inspired Money guests, how do you define success?
Happiness. I think for me, success is happiness. And that's a mix of financial success, professional success, personal success, family, and even free time. Because if you don't have time to do the things that you like to do, I spent the weekend in Montana with my son, 17-year-old son, and just having those moments. I mean, that's why I'm working. I love what I do, and so working can be its own reward. But I guess I've never thought of it this way until just now, but in my rewards portfolio, I want to be diversified. So I don't want all my rewards to just be the accolades or the success I have from working. It needs to include, a broader set of rewards. So I'd bunch that all into one word of happiness, I guess.
You want your family to still like you.
Yeah. So far, so good for the most part, I guess.
Well, thanks for sharing your story and your
Thank you.
strategies. I really like what you're building. Just the idea of being able to own Bitcoin in an IRA,
Mm,
or even better, in a Roth IRA
yeah,
account is significant. Not to mention accessibility, just for ease of people to allocate some portion of their money
right.
to Bitcoin and other digital currencies is huge. Tell the Inspired Money listener and viewer where they can follow you and find out more.
Sure. So on Twitter, my handle is at Greg King Osprey, all one word. And our website is ospreyfunds.io. You have to do the .io to be cool, right? No more .com. So ospreyfunds.io, all the information on all our funds is there. If you're interested, drop us a note, subscribe to the newsletter. We've got a great newsletter that comes out every weekend. We keep getting a lot of comments on it. So people are enjoying that. And yeah, we'd love to talk to any of your listeners.
You're very cool.
Thanks,
Greg.
man. All right, take care.
So what was your favorite Inspired Money moment? I love Greg's motivation to bring greater access to investors so investing can have a positive impact for more people. Greg also mentioned that we're still in the very early stages. His company is offering the equivalent of a one-stock fund. For investors, this is an area worth watching as it evolves. Remember, cryptocurrency is extremely volatile, so please be careful. Highly volatile assets should only be a very small percentage of your portfolio, and diversification is important. If you had a different favorite Inspired Money moment, let me know by posting a comment below. Thank you so much for watching to the end. I want to invite you to subscribe to my email list that goes out every 2 weeks. The Runnymede investment team highlights data, news, and events that we think are worth sharing. Subscribe at inspiredmoney.fm/newsletter. It's free and informative. Thanks for joining me on this mission. Have an inspired week and do something that scares you, because that's where the magic happens.